The chair now recognizes the gentleman from North Carolina, Mr. McHenry, Vice Chair of the committee.
Well, Chair Powell, thank you for being here. I want to shift to cryptocurrency, which is a bit of your monetary policy hat, but also a bit of your regulatory hat. And I want to get your thinking along the lines of cryptocurrency. So, the Bank of International Settlements just released a report saying that cryptocurrencies were, quote, a poor substitute for the solid institutional backing of money. You've stated publicly that the cryptocurrencies are currently not big enough yet to matter, or something along those lines. I would submit the report by the Bank of International Settlements misses the mark of the potential of blockchain, the potential of crypto more broadly. But there's a great deal of interest in your views and central banks' views more broadly on cryptocurrency. So can you just outline to me your thinking on cryptocurrency?
Sure. So first, I would say, I think the question I was asked that you're referring to was, do cryptocurrencies currently present a serious financial stability threat? And my answer was, they're not big enough to do that yet.
Sure.
That's really what I was saying, not that they're not a longer-term thing. So they are very challenging because, cryptocurrencies are great if you're trying to hide money or if you're trying to launder money or if you're, so we have to be very conscious of that. I think there are also significant investor risks. Investors, relatively unsophisticated investors, see the asset going up in price and they think, this is great, I'll buy this. In fact, there is no promise behind that. It's not really a currency. It doesn't really have any intrinsic value. So I think there are investor consumer protection issues as well. Another thing I'll say is that we're not looking at this at the Fed as something that we should be doing, that the Fed would do a digital currency. That's not something we're looking at. So mainly I have concerns. I mean, if you think about what currencies do, they're supposed to be a means of payment and a store of value, basically. And cryptocurrencies they're not really used very much in payment. Typically, people sell their cryptocurrencies and then pay in dollars. And in terms of a store of value, look at the volatility in it. It's just not there.
Well, has there been discussion with other G7 central banks along the lines of cryptocurrency?
It comes up a lot, yeah. I mean, I'm only just starting to go to G7 meetings, but it comes up quite a bit in international forums of various kinds. There's a broad concern that the public needs to be well informed about this, I think, and that again, the money laundering and terrorist financing and all of that is a big risk.
It's a big risk, but is there any conclusion that you're hearing, or is it just a broad concern?
Well, I think the BIS report and others have called out these risks and called on the appropriate regulatory bodies to address them. We don't have jurisdiction over cryptocurrency. We have jurisdiction over banks, and so we know in their activities with cryptocurrency companies and cryptocurrency, we can address that. Others can address the SEC can address the investor protection aspects of it.
But you don't see this as impairing your ability to act on monetary policy,
not
just given the current shape and scope of the size of the market?
Really not at all today.
Okay. So, we currently have some level of framework around regulation of cryptocurrency. You got a money service license at the state level. In our 50 states, they all have some requirement. So there's a great look into that conversion, the movement of cash into cryptocurrency or out of cryptocurrency back into cash. We have some element of regulation at the CFTC and the SEC. So there is some broad framework of it, but not a concerted effort by the federal government to understand what's happening in cryptocurrency. Do you have any staff resources devoted to figuring out cryptocurrency or following cryptocurrency?
Yes, so we've looked at it carefully. I spoke about it. Other governors have spoken about it. Reserve Bank presidents. There's plenty of work going on, but again, we don't have this regulatory authority to deal with it. So I think that's the key thing is to be looking at the places where there is that regulatory authority.
Okay.
So.
Thank you, Chairman.
Gentleman yields back. Chair now recognizes the gentleman from California, Mr. Vargas.
First of all, I'd like to thank you for one thing that's obvious, and that is that you haven't gotten yourself in trouble. And thank you, Mr. Chairman. You haven't gotten yourself in trouble. You've been a great public servant, and I really appreciate that. Unfortunately, you shouldn't have to say that these days, but you really do, what we've seen recently. I do want to ask a little more about cryptocurrency, however. You talked about terrorism, and you also talked about hiding money. I had a bill here with a colleague of mine on the other side exactly on that point, and I'd like you to go a little deeper on that. You said it's not an issue yet because it's not large enough, but it does seem to be growing. And you said you also have jurisdiction over the banks. Should you have jurisdiction here, cryptocurrency?
That's a deep question. We're not seeking it.
But should you?
I'm not going to say yes today. I don't. We're not looking to. You know, it's right in the middle of the SEC's turf, the investor protection aspects of it. I think Treasury and FinCEN and other people have. I think it should be well regulated. I don't really see us as probably the right group to do that.
But it seems to me right now that no one seems to have quite a hold on it either. It seems to be this amorphous glob that's moving around. You talk to the SEC and they at the same time kind of kick the ball around also. I mean, shouldn't there be a more concerted effort to try to figure out who's in charge here of cryptocurrency? Because I think that there is lots of opportunities here for not only terrorism, but also for drug trafficking, sexual exploitation, human trafficking. You said terrorism, but all sorts of bad actors, I think, can use this. And I don't think that we have a good hold on it yet.
I think it's a good idea to focus on getting the regulation at the federal level of this right. Again, we're not seeking that at the Fed, but and I know Treasury has done some thinking on this. This would be an area where they'd have the lead to sort of identify the right regulatory structure. They may have already published something on this. I'm not sure.
In fact, part of the bill asks them to speed that up and to report back to us.
Gentlelady's time has expired. The chair now recognizes the gentleman from Georgia, Mr. Scott.
Thank you, Mr. Chairman. Chairman Powell, excuse me. Welcome back again, and I want to thank you for spending some private time with me. We had a wonderful discussion and covered a lot of territory when you were here last. But I watched your testimony over in the Senate on yesterday, and I want to clarify something with you. You talked about the regional banks, those banks that are at the between 100 billion and 200 billion in range, and you talked about Senate Bill 2155. Which I supported very strongly, and we got good support on in terms of the banking regulations. But in Senate Bill 2155, we gave you, the Fed, substantial authority through rulemaking to tailor regulations for these mid-sized banks, for these important regional banks. And I watched the testimony, and you reassured the senators that the Fed wasn't going to just flip the switch off on a bunch of the enhanced prudential standards, but instead would diligently work through a thoughtful and careful rulemaking. And I was very pleased to hear that. But I want to ask get some clarifying information from you. Because Georgia, as you may know, is the home of a couple of these very important regional banks, Regions Banks and SunTrust Banks. And the question is, do you envision the end product of this thoughtful and diligent rulemaking process to be a set of enhanced prudential regulations to these SIFI banks that is drastically different than those of the G-SIBs or the global banks?
I anticipate that we will begin by identifying and then putting out for comment a framework that we'll use to assess financial stability and safety and soundness risks of those institutions from 250 down to $100 billion. And we'll take comment on that, and then we'll go ahead and move forward with a framework. And I anticipate that many of the factors that are used to identify the SIFIs will be used in this context as well. We're still working on exactly how to think about it. We have great flexibility under the law, which we appreciate, and we'll be coming forward with something on this pretty quickly, I think.
Do you see any problem areas that these mid-sized banks or regional banks might have to be concerned about? Or do you see a sort of a clear field here?
Well, I guess I would just say we're going to go ahead and do what the law asks us to do. I don't see why anyone should be concerned about that.
Good.
So.
Wonderful. That's good to hear. Those banks, all our banks are very important, but we have so many different sizes, and we got to make sure there's a level playing field for